we talk about what happens when I die, and all of your assets and are brought to fair market value and deemed sold. And when it comes to business owners and existing shareholders in companies, well, if the death of that one shareholder, now they're the shares of that company get rolled over to their spouse. So now the surviving shareholder will have a new partner in the company.
Welcome to the Business Ownership Podcast, brought to you by Awareness Strategies, helping you navigate the waters between entrepreneurship and ownership. Hey there, peeps. This is Michelle Nedelec, and I'm super glad that you're here with us today because I'm here with my most amazing guest, Collin. Collin, thank you so much for being here with us today.
Yeah, thank you so much for having me. I'm super excited to be here as well.
Awesome. So give us a highlight of who you are and what you do for business.
Yeah, as Michelle mentioned, my name's Collin Andries, and I'm in private wealth management. What I focus on mostly with business owners is basically stress testing their states and de-risking their business, whether they are just the sole shareholder of the business, or if they have partners, we kind of go through some exercises to help them manage a succession plan for their business for the unforeseen events that may occur.
Nice. We will totally get into that in a second. But first of all, I want to back up the bus a bit. And how did you get into kind of estate planning as a thing?
Yeah, that's a good question. So I have an accounting background myself. And a few years ago, I got more so involved with personal financial planning. And given that I speak accounting and understand corporations and business owners, I figured that I would just marry the two concepts together and start helping business owners specifically plan for, like I said, death and injury. It's not a happy topic, but it's one that definitely needs to be addressed.
Right. I would assume so, because I'll assume that a lot of people out there are like me, and it's like, no, I'm invincible. I'll live forever. This isn't going to apply to me. And we don't do anything. And then when it does happen, we're like, oh, should have done something.
Yeah, that happens far too often. Or something does occur and people are way more reactive to it. And by that, or at that time, it becomes a lot more difficult to plan. And a lot of our options for planning are now off the table. So, yeah,
Right.
little foresight. We got to look at it today.
Yeah. So what are some of the things that could go wrong? Like what are the things that might be off the table when it's too late? Obviously, life
Um,
insurance, but
Yeah, life insurance for sure. It's just health. As we get older, things happen. Your health deteriorates a bit, and then once you realize there may be a risk, like I said, it might be too late based on insurability. So you may not
Mhm.
qualify for those options anymore. So yeah, and then on the critical illness and disability thing, again, a lot of people want insurance when they are eventually disabled and can no longer get it. So
Right.
yeah.
So obviously the best time to do it is today. So,
Yeah.
what are some of the, I guess, what are some of the problems that people have that you're looking at when you go to the table with them? What kind of areas or aspects of their life are you looking at?
Yeah, we look at the bigger picture. Actually, that's a great question. So when we do a plan, we break it out. We take a picture of their full situation, the corporate structure, and then break it down to them personally. And what I do is I stress test their situation. So we run through a little exercise where I basically kill that individual off. And although it's not fun, we help answer the questions, what
That's
happens
hilarious.
when I die?
Yeah.
Not from a religious standpoint, but definitely from a financial and estate standpoint. And it becomes quite informative to these individuals that we run this exercise with, because we see, again, depending on their corporate structure and who's involved, what are the implications of death at that level. And then it's obviously they have families or their own personal situations, so we run that through to their family and what financial impact that would have in their households. So we look at things from not only just the risk of the business itself, being like, okay, well, this shareholder, how involved are they in the business? Will business revenue continue if that person is no longer around? So we have those discussions. And then on a personal standpoint, we go through and calculate the actual estate tax and shrinkage, along with, again, loss of income, whether we want to uncover or cover off any debts that are outstanding from a household perspective. And then, yeah, once we have numbers in front of us, we make educated decisions for those individuals.
Awesome. So I assume that there's a lot more at stake for most people than kind of what's right in front of their eyes, right? We're running business and you're going, oh yeah, I only need, X amount of dollars to be able to get by and, on my monthly, but they're not taking into account other aspects. Like, one, are the debts going to be called because that person was personally liable for them, even though it's a business loan? What happens in a business that people aren't prepared for?
Yeah. And again, it's all part of that conversation. So a lot of people just think they have a number in their head, but they never really go through all the little intricacies. And you'd be shocked at how many conversations I've had with people, and they have an idea, again, what they think is going to happen. But
Mhm.
when you go through this exercise and see what the true implication is, it becomes alarming. So with these stress tests, again, and part of a full-blown estate plan, there's the legal aspect of it as well, where you have your shareholders agreement in place for business owners, as well as on the personal side, your will, power of attorney, and personal directives. So um, again, I've had so many conversations with individuals and business owners about, they think that, oh, my lawyer's taking care of that, so I should be good. Well, depending on how your finances are structured, again, there may be a disconnect or gap with the planning, because those two pieces, the finance and the legal, have to talk to each other for a plan to be full, in my opinion. So,
So do you actually get in the room with lawyers and, and help them to plan these things out, or how's that going?
yep, absolutely. And again, because when you have your finances, depending on how they're structured, when you have beneficiary designations attached to registered accounts and things like that, that bypasses your estate, and the will is not even triggered at that point. So it is super important that both professionals, your financial planners, as well as your legal team, your lawyer, are on the same page with how your estate plan should look.
Well, and do their accountants come into that play as well? Because I would assume that there's like tax implications, all sorts of things that people don't realize when that happens.
Yeah, absolutely. And accountants see tax planning in a completely different light than financial planners do. So if you can get them to the table as well, you're hitting a home run in terms of your plan.
Nice. Well, and I assume too, there's a lot of things in business that because I was always kind of sole owner, I'm just like, it'll just take care of itself. It'll be fine. But as soon as you start getting partners involved, things aren't just fine. So things like, shareholders, debts, or loans, what happens to those if somebody dies?
Yeah, well, so that's a good point too. So when we go through these conversations, we talk about what happens when I die, and all of your assets and are brought to fair market value and deemed sold. And when it comes to business owners and existing shareholders and companies, well, if the death of that one shareholder, now their the shares of that company get rolled over to their spouse. So now the surviving shareholder will have a new partner in the company. And whether they want that new partner in the company or not, helping make decisions on the business and the direction of where they're going, they may not like it. So I think the first step to de-risking any business is to have an honest discussion with your partners and put together a proper unanimous shareholders agreement, because that is basically the legal documentation that dictates if there's a triggering event, then what happens and what has to follow. So it takes the emotion out of anything when it does happen, because you just go back to that document, and that'll just tell you what is going to happen.
I love it. And is there kind of a better time than yesterday to start putting these things in place? Like if a company, is there such a thing as a company being too new or, anything like that?
No, not at all. And you know what? A lot of these solutions and conversations, again, they don't need to break the bank. So for new companies that are just getting started, to get some sort of coverages in place, there's really affordable solutions out there to make sure that their businesses are protected. And then companies, yeah, who are in the growth or more established phase, and you don't have a unanimous shareholders agreement in place, I highly recommend you do get one, as well as start thinking about 10 years down the road. What do you want the business to do? Everyone has a planned exit in mind, whether they want to sell the business or transfer it to a family member. But like I said, the longer you wait, the more options come off the table because it may not be affordable at that point, or again, the unforeseen happens, and then you're being reactive, and that's never a good thing in the financial planning world.
Right. Well, and it always reminds me of, I heard, I believe her name is Luann Mitchell, of Mitchell Foods, when her husband passed away and the board decided that they needed to take over the company during the funeral. So she had to drag her kids over to a board meeting to be able to keep her own company because of the board. So it wasn't even a partnership agreement. It was the board that was deciding to take over. And I think a lot of people are amiss at how important it is to their family to have those assets, especially when it's becomes, a valuable commodity.
100%. And again, you're in such an emotionally charged situation
Right.
when that does occur. The last thing you want to be doing is worrying about that specifically. Like, yeah, and a lot of these spouses that are now taking over the company haven't necessarily or may not have been involved or even want to be involved. So
Right.
again, to have a plan in place that it just ensures that their finances and their financial future is protected. And then again, whoever's all the stakeholders that are still in the business or evolved in some capacity, customers, staff, employees, like to ensure that the success of the company remains and that everyone else is, well, it just continues on like business as usual. So again, there's so much involved with a proper estate plan, and I don't blame business owners for not really focusing on this. No one likes to think about death or getting hurt or injured or sick, but when it does happen, my God, it's important. So
Do you have an example of, let's call it a Cinderella story of a client that, and it's got to be a little more difficult in this scenario because, the outcome's almost, when it's good, it's never that good because something had to have happened in order for this to get cleaned up. But anything
yeah.
like from chaos to clarity or something like that, an example of a client of yours.
Well, yeah, and it's funny you use the word Cinderella story. What we're talking about is a lottery that you don't want to win.
Exactly.
So, and it's unfortunate, but um, I have one. It's not necessarily a Cinderella story, but it's a client who came down with a critical illness. He's runs a small business. He's heavily involved in it, and he was diagnosed at the age of 40 with colon cancer. And basically what had happened was he had to get and do a whole bunch of surgery, and then the cancer had spread, and he had to take time away from his business. It's a service business, so like I said, it's heavily reliant on him being on the front lines of that company or his company. And I just stopped and asked him, like, how are you doing? And all he said, he's like, you know what, put all of this aside. I don't know what's going to happen. And I just want to spend time with my two little girls because next week's not promised anymore. And it was a big eye opener for him. So again, having that proper coverage in place and being able to get that payout where he can now afford to take time away from his business and focus on getting better, heal, and spending time with his two daughters was meant the world to him. So maybe this is a Cinderella story. He beat it. He's on recovery now.
Yeah.
He's done chemo and he's back at work. But again, having that peace of mind where you remove the financial stress in that situation,
Yeah.
it goes a long way.
Nice. Well, yeah, and my heart goes out to him and to his daughters, because that's, in reality, you don't want to be slapped up with at all in any circumstance.
He
So
didn't, yeah,
awesome,
he didn't
awesome,
plan to get colon cancer.
right? What? That wasn't part of
Yeah,
the plan. Uh,
yeah,
totally.
exactly.
So I guess anybody listening to this, if they don't have um anything in place, whether it's insurance, they're understanding their state, where the trusts are, all that kind of fun stuff. Is there anything else that somebody, a situation that our listeners might be in right now that, they're going to be thinking, okay, Collin, I need to connect with you?
Yeah, I would just say, like, so given my accounting brain and how this all works is, again, when we go through these stress tests, it doesn't need to necessarily be uh, a difficult task to do. So just make sure you do it though, run the numbers and see what they come out to be. So it gives you then an opportunity to make an educated decision on what's best for you. Again, maybe you don't believe in insurance, but you can then start to plan to have a little bit of a corporate savings account, or what they call as a sinking fund, to cover off the unforeseen. But if you have those numbers in front of you, like I said, and you've understand the risk and have identified that risk gap, whether it's going to be, again, loss of income, covering off debts, and or the biggest one, estate tax. Once you've identified that, that's the first step. And then you can make a decision on what's best for you, your business, and your family. So if you're thinking about it, just run through those exercises. They're massive and of importance.
And how often typically do the rules and regulations around estates change? Because I know that there's been a ton of chaotic changes going on lately, that I don't think people realize how impactful it is.
Well, I mean, they're always changing. The CRA is looking for money in every every corner of our financial system here, but they yeah,
So
they
like
change so
yearly,
so
does it make sense to go
frequently.
through this yearly, or is that too often?
I wouldn't say that per se. Like,
Okay.
for example, they've been talking of, like, especially for business owners, um, they've been talking about, like, they've changed the rules on succession planning and family run businesses, and they're changing the rules to make them a little bit more favorable. Over the last couple of years they haven't been. So you're right, it is important to stay on top of these changes, um, but for the most part what we're talking about here is, if as long as you're, again, have a plan in place where it's not going to impact you materially, then you should be good on an annual basis to carry forward.
Nice. I love it. So I know our listeners are going to want more from you. How did they start that journey with you?
Yeah, go visit my website. So www.accessiblewealthstrategies.com. All of my contact information is on there. Just to let people know that I am currently registered and to help service Western Canada.
Mhm.
So British Columbia, Alberta, and Saskatchewan is where I'm licensed at the moment. But that doesn't mean that I'm not able to have a conversation with you. And if you have any questions or concerns and you're not in those areas, feel free to reach out. We can absolutely have a conversation, and I can provide some guidance or give you some things to think about as well. So I don't discourage that.
Nice. Love it. We will, of course, have Collin's links in the show notes. So go ahead and scroll down and check those out. Open them up in a new browser, of course, because we're not done yet. So, Colin, I get to ask you, at what point in life did you know you're especially kind of crazy enough to think that you could become an entrepreneur?
Oh my goodness. It was actually a good friend of mine who started running his own landscaping company. And I've worked for other financial institutions in the past, like Investors Group and CIBC, and had some issues and realized core values didn't necessarily align with how they run. So he was the one that pushed me and said, "Man, just do it on your own." I'm like, "What are you talking about? That's scary." And it was the best thing I ever did. So I hats off to him and pushing me over this ledge. It's been a wild ride, but I'm loving every minute of it.
Nice. I love it. You've been
Yeah.
absolutely awesome. Any last words for our peeps?
No, I want everyone, and I'm a big advocate of success. And for all the new business owners just starting out, keep going. It absolutely does get better. All the established business owners, again, look at those documents. Do not think that you are invincible. That is the worst thing you can do. Again, to your point, Michelle, everyone's Superman until they're not, and that's the unfortunate reality. Death and taxes.
Right.
Yeah.
Absolutely. Awesome. Thank you so much for your time. I appreciate it. And I know how valuable it is.
Yeah. Thank you, Michelle. Thanks for having
Awesome.
me.
Peeps, thank you for being here with us today. Be sure to subscribe to the show and share with your friends. We love helping entrepreneurs grow.
Are you running a business over 7 figures but still struggling with technology headaches? Pay attention, you do not want to miss this offer. This podcast episode is brought to you by Awareness Strategies, who is offering a custom-built digital adoption roadmap for anyone running a business over 7 figures who's wanting to grow their business in the next 5 years. And it's not just a roadmap, they offer full implementation as well if that scares the out of you. Check out awarenessstrategies.com/roadmap for more details today. The link's in the show's notes. Don't regret not doing this. Do it now. That's awarenessstrategies.com/roadmap.